Traders, how you doing? This is Greg McLeod from Elite Traders University, and I'm just going to do a little rundown, little summary of the economic news that's coming up for this coming week. This is the week of the 28th. This is the last week in June. Can you believe it? We're halfway through 2021. June 28th will be that week, that Monday, and then we'll be we're going to look forward to non-farm payroll because it'll be July. And so that'll be the first Friday of the month, will be July 2nd. So let's go ahead and look over at the economic calendar and see how we can plan our trades. Now, it's really important to look at the economic calendar. When I used to trade, I never looked at the economic calendar. And consequently, I would see these really sharp moves in the market, and then I would go, what happened, not knowing what was going on. Very frustrated. And then sometimes I'll sit in the market and nothing will happen, or nothing will happen, but something would happen in another currency pair. And I'll say, well, why didn't I make any money? I was up and, during a certain time was a lot of liquidity, but other currencies are moving, but not the one I was in. And what I really found out was that the economic calendar is like, it's like having a sheet that tells you where the party is going to be, right? If you've ever been to a party and you got there and there was no one there because the party is not there, but it was across the street or somewhere else. There was there's no music, there's no dancing, there's no people, there's no snacks. But there's lights and cheering and things going on because you're at the wrong party. And what happens to Forex traders, mistake that I found I was making was I was trading in a currency pair that was not having a party. There was no action, there was no liquidity, because I didn't consult the calendar. The calendar tells you where the party is going to be. If it's Canadian data, some type of retail sales report, well, guess what? The Canadian dollar is going to be on fire, right? High volatility. These news events create volatility. Volatility creates action. Action creates tradable opportunities in the market. It doesn't tell us what direction is, because I call them fundamentals. Sometimes they go up when the data is good. Sometimes they go down when the data is bad. Or sometimes it's the other way around. It goes up when the data is bad and it goes up or down when the data is good. So I don't look at it for a directional bias. I just look at it because that's where the action is going to be. And I want to be where the action is, right? And that's where you want to be too. So that's why it's very important to look at the economic calendar. So let me go ahead and pull it up. And you can find this at My Market Heatmap. My Market Heatmap is a all-purpose tool, a financial scanner. You can try it free try it for $1 for 7 days. So it's just $1 for 7 days. And if you like it, and you can have a lifetime access for a very special price for you guys who are viewing this video. Okay, so let's get to it. I'm using my phone right now. I'm going to share my screen. So I'm going to share the screen, and we're going to, we'll get right to what's going on there. Okay, and here we go. So this is my market heat map. It's an arrangement of currency pairs by percentage change. But as you can see, everything is gray. And that means that the market's moving sideways. If it were moving in an uptrend or trending up, you would see certain these boxes turn green. And if it was a downtrending market, some of these boxes would turn red. Okay, and the ones that are not moving at all, like they are now, because it is Saturday, then they would be gray. Okay, so that's why it's showing that. But when we look, there's a lot of tools and things in here, including signals, including, in fact, there's a 30-day free trial for signals, and then it's just $19.95 a month for signals, and they're pretty good signals, very good signals, in fact. But let's go right to one of the tools that I want to look at. Is the economic calendar right there. Okay, this is like a Swiss Army knife. This is what you take. You take the Swiss Army knife when you go camping, as a spoon, so you can eat like that food in a can, or it has like a knife where you can chop some sticks, and maybe it has a little built-in flint stick so you can make a fire. This all-purpose little tool that you carry in your pocket allows you to survive in the world. So I look at my market is that Swiss Army like that tool that you can use. Okay, so let's get right to it. Let's share your screen here, and we are going to go ahead and look at this week. Let me go ahead and go back here. Let me go back, share my screen, right? Stop share, and let's try sharing again. We're going to share our screen, and then we're going to start casting, and then we're going to go to our economic calendar, and then we're going to go to deselect all the low. Okay, so there we go. And so we're going to look at next week. Okay, so here's what we got going on. We have for next week, the 29th, we have RBA Governor Lowe speech. That's going to impact the Australian dollar. And this is going to be at 19:15, which would be 7 p.m. 7 p.m. on Tuesday. That's a high impact item because RBA stands for Reserve Bank of Australia. And Governor Lowe is the head of the RBA, just like our Jerome Powell is head of the FOMC, which is the central bank of the United States. This is the RBA, the Central Bank of Australia. And remember, the job of a central bank is to provide either price stability and or full employment. And so they do this. One of their biggest tools is through moving interest rates, either raising them to slow down growth or lowering them in order to encourage growth. And that involves printing more money, making money cheap and available, like during emergencies like the global financial crisis or the COVID-19 pandemic. So it's very important because the biggest impact of currencies is interest rates, okay? Money is trying to seek, higher yield. And if an interest rate is higher in one country than another, then demand for that currency usually drives up the rate of the currency, okay? So, and we've had rates very low for a very long time. So any hint that we may be getting back to normal with normalizing rates, moving from these very low interest rates that we have globally, some countries even have negative interest rates. So if they even hint at possibly raising rates, then that could make the currency go higher, okay? But we're not really determining whether or not it's going up or down. We just know that the party is going to be on Tuesday and possibly Monday leading up to that announcement or into that speech. And the Australian dollar is going to be in play. So we would look at currency pairs. What can we trade? We can trade Aussie CAD, Aussie dollar, Aussie versus the US dollar, Aussie versus the Japanese yen. We can trade the pound versus the Australian dollar or the euro versus the Australian dollar. Those would be currency pairs we'll be looking at. We won't necessarily be looking at, something that is not like, maybe pound yen. I want to trade pound yen. I always trade pound yen. Well, guess what? If you're trading pound yen during an Australian announcement, you're probably not going to get a lot of pips, okay? The volatility is going to be around the announcement that's coming out during that time or leading up to that time. Because some of these larger players, they're moving billions of dollars worth of currency, called yards. They're moving yards of currency. And it takes a while to dig. A lot of times these orders are done by phone, and so, and there's all kinds of deals going on between banks in order to move this. And so they don't want to move prices so much by their orders, so they move them in blocks. So even though the announcement comes out on Tuesday, money might start moving in or out of the Australian dollar starting Monday, okay? And so that's what we use in our Pip and Run strategy. We're able to follow the money. We can look at institutional order flow, and we're able to see where that money is trickling in, and it gives us an ability to forecast direction. Now, can't go into that, but if you're interested in something like that, feel free to go to elitetradersuniversity.com/apply and register for our masterclass and to speak with one of our associates if you would like to find out more. Okay, so moving right along to Wednesday, June 30th, we're talking about the gross domestic output product for Canada. That is going to be at 8:30 a.m. Eastern time on Wednesday, and that's a high impact item. They expect the GDP measures the economic strength or growth, productivity of the economy, usually backward looking. They forecast call for a drop from 1.1% to 1.0%. Okay. And so we could see the Canadian dollar could be negatively affected if the forecast is right. A lot of times these forecasts are wrong, and then the Canadian dollar goes the opposite direction. Remember, Canada has been selling a lot of oil around the world and a lot of lumber. So this number may surprise to the upside. But anyway, we just know that the party on Wednesday will be in the Canadian dollar after the party is finished in the Australian dollar. Then you want to be able to look at the Canadian dollar versus the Japanese yen, CAD-JPY, or Canadian dollar versus the Swiss franc, CAD-CHF, or US dollar versus Canadian dollar, USD-CAD, one of my favorites to trade. Also, the CAD yen, I mentioned the CAD yen, okay? So let's move on to Thursday, July 1st. Hey, and that's going to be our first day of July. We say goodbye to June, and we have some announcements, 3 announcements for Thursday. We have the market manufacturing PMI at 3:55. That would be 3:55 a.m., almost 4 o'clock a.m. Remember, my time is 1 hour off of Eastern time. High impact item expected to, the previous number was 64.9. They're expecting the PMI, which means Purchasing Managers Index, PMI. And when you think of PMI, or when they say index, it's just an inflation number. The manufacturing producers manufacturing index, right? So the index, anytime they put index, like CPI, Consumer Price Index, CPI, right? But this is basically, they're polling manufacturers and seeing what they think about what's going on in the economy, whether they're optimistic or pessimistic, and so it's more of a sentiment indicator. Especially if prices, inputs, and things that used to make stuff cost more, they might not be so happy, right? And that could, and since we're looking at, this is the flag of Germany, and Germany is part of the Eurozone. Normally we would see a blue flag with like stars, the circle of 13 stars for the Euro flag, but this would impact the Euro, okay? Because Germany is part of the Eurozone. And so we would see the Euro impacted by this number. So we know that on July 1st, we can look to trade the Euro. We can also look at, later on, we're going to look at the pound, the same indicator for UK, for Great Britain, which is the GBP. Great British Pound is the currency of the United Kingdom. And that we will expect some movement in the currency on July 1st as well, just about 30 minutes after the, or about an hour after that, okay? And then at 9 o'clock, we have the ISM manufacturing PMI as well for the US. That's expected to fall from 61.2 to 61.0. So we got USD, you have a full range of choices there because it's impacting the US dollar. But remember that certain countries are like closed and are asleep during this announcement. Remember, when we get into the New York Open, and we're looking at the 10 o'clock news cycle, 8:30 and 10 o'clock US news cycle, the only markets open is North America and Europe, okay? So I wouldn't necessarily trade Aussie dollar because Australian banks are closed, Asian banks are closed. So I would look at trading European currencies versus the US dollar or other North American currencies like the dollar CAD. Canada's also in the Northern Hemisphere. They also in the same time zones, okay? They share the same time zones, they share a common border. So I would look at USD CAD to trade, or the party might be in pound versus USD, or the EUR USD or CHF, all of the European currencies versus the US dollar. And really, the one with the most volume and the most liquidity is the euro. Euro, or USD is the most widely traded financial instrument in the universe, other than maybe dilithium crystals, maybe, okay. But, or cold pressed lanthanum for you Trekkie fans out there. But as of this 21st century, the euro is the most widely traded financial instrument. Sorry, Bitcoin. You are far behind the euro, okay? We're trading $6.6 trillion, and most of it's done in the euro and the US dollar. You don't have a chance. Okay, moving right along, Friday, July 2nd, 2021. It's what we've been waiting for. Drum roll, please. It is NFP, or non-farm payroll. And no, there is no, someone asked me, is there something called farm payroll? I was like, no, there are not that many farm jobs. A lot of the farms are corporate company or big industry, like Arthur Daniel Midland, some of these big agricultural firms. But there are a number of small family farms, but not enough for them to actually have a number for that would impact the market. I'm sure the BLS has a farm number somewhere, but we don't trade that. So it is non-farm. So we have non-farm payroll for the US. Usually we have Canada here as well, but we don't see it. But look at the number. Previous number was 559,000. We expect an increase to 600,000 jobs to be created. And so, again, the party is going to be in USD and the US dollar. And you can go pound versus US dollar, pound, euro, US dollar. You get muted moves in those other currencies. They can move in as well. But the most volatility is going to happen closer to the currencies first of countries that are open during the announcement. I know it sounds pretty obvious. Yeah, Greg, I mean, think about it, okay? Japan is closed, okay? They are asleep. It's very late. In Japan, it's very late in Australia and New Zealand, or very early in the morning. And so their markets are closed. So those banks that make volume in this market are closed. So it doesn't mean that they won't move, because there are a number of traders around the world and hedge funds that, they call themselves maybe diversifying into these other currencies. But the impact, the big volatility is going to be closer to the epicenter of the quake. Okay, so the most damage is going to happen closer to the center. So if you're trading USD versus another currency that is also open at the same time, like Canadian dollar or the Europe markets, you trade the euro or the Swiss franc, which is also in Europe, but they have their own currency, or the pound, which is also in Europe, but it has its own currency. So you can trade those currencies versus the US dollar and find lots of volatility leading up to, and especially if you've had pound news that came out on Thursday, UK news, and you had Eurozone news come out as well on Thursday, then you might see some continuation trades that may come into fact. A lot of pullbacks that can be tradable into this announcement, which can give you an edge in determining what direction to trade this market. Okay. Now, news trading can be risky. If you don't have a system of predicting the market like Pip N Run, being able to forecast what's going to happen next. If you don't have that crystal ball, then, what you should do is to stick with a news fade strategy. And stay tuned for my next video, when I actually will teach you the news fade strategy in our next video. So make sure you like, subscribe, and share this video, and also write your comments and ask me what kind of content you want to see next. What kind of videos do you want to see me produce? Because I want to help you and support you in your journey to professional trading, and so I want to be a helpful resource. So put your comments below, and I look forward to seeing you later on the other side. This is Greg McLeod from Elite Traders University, and make sure you also visit our website. And there's also a free masterclass and an ebook available called The Income Blueprint. Talk to you soon. Peace and pips. Greg McLeod signing out. and going to do that right here. Woohoo! Okay, bye. See you later. I did this completely on my phone. What'd you think about it? Let me know in the comments below, and let me know what you think about it. All right, cheers. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!